George Huss here. Welcome back to our series on how to make the most of your 401k investment options. Remember, in the last episode we said we were going to review the top 5 mutual funds that are offered in 401k plans today. In the first episode we reviewed the American Funds Growth Fund of America, and today we're going to use the Euro-Pacific Growth Fund, which is also another American Funds offering. Remember, the objective here is to help you break down barriers to making better 401k investment choices. We'll do this by helping you understand an investment method that's been used by Wall Street insiders now for over 130 years. This method is called point and figure charting. We use this method because of all the forms of technical analysis. This is, in my opinion, the most easily understood yet accurate method of investment analysis. If you can count to 3, you can create and understand a point and figure chart. A 10-year-old can read one of these charts. They are simply a logical, organized, systematic way to determine if supply or demand is in control. Once you can see this, the frustration of riding markets up only to ride them back down, as we've seen over the last 12 years, can be eliminated. And decision-making becomes easier because there are clear trends which can be seen, as well as price supports and price resistance levels. Just a side note, in the last episode I walked you through a detailed instruction on how to use an online free charting service at stockcharts.com. Someone suggested I read the website's terms of service, and if I understand the terms of service correctly, users are free to link to the website but not to specific charts. I've sent a message to the company and asked if the last episode on YouTube was a violation of the terms of service. If so, I'll make the necessary adjustments to the video. Until I hear from them, I'm going to use charts derived from a paid institutional level service, which I've been using for over a decade. The standard required disclosure is probably appropriate at this point. Past performance is not indicative of future results. Remember, this is not about predicting, it's about measuring. I was first introduced to this method over 30 years ago, and I can assure you this is an art, not a science. However, it is remarkable how trends are easily identified and patterns repeat themselves regardless of whatever investment is being analyzed. So let's get started. The next most popular fund offered in 401k plans today is Euro-Pacific Growth Fund, and the ticker symbol is AEPGX, Alpha Echo Papa Golf X-Ray. Just a reminder, if you are listening in on the podcast and you're a visual learner, you can follow along on the 401k Owner's Manual YouTube channel. If you want to practice on stockcharts.com, here's a quick recap of the settings. Once you're on the landing page, you'll see a baby blue box titled Welcome to stockcharts.com. Just above that, you'll see a blue-gray banner that covers the width of the page, and inside the banner you'll see the text Create a Chart and a drop-down menu with the default set at Sharp Chart, and a box which says Enter Company Name or Symbol, and a button that says Go. Click on the drop-down menu. The next type of chart is P&F chart. Click on that, and then in the box which says Enter Company Name or Symbol, go ahead and enter the symbol of Euro-Pacific Growth Fund, and the ticker symbol is AEPGX. That's Alpha Echo Papa Golf X-Ray, and then click on the Go button. Below the chart you'll see a line with the following blue hyperlinks: Instructions, Understanding, Print, About P&F Alerts, About Price Objectives, and Past Data. In the box titled Chart Attributes just below, look for the drop-down menu to the far right for chart size. Click on the drop-down box and find the size identified as Mega and in parentheses 1000. Click there. In the next large box titled Chart Scale, click on the drop-down box for Scaling Method and select User Defined. Right next to the Scaling Method drop-down box, you will see where you can change the box size. The default is set at 1. Change that value to 0.5. Skip down below the box titled Duration and the box titled Chart Overlays. to the button that says Update Chart. Click on Update Chart now. You should see a chart which looks the same as the one YouTube viewers are seeing right now. Quick review. Down the left and right columns, you'll see numbers from 47.5 to 11.5. These numbers represent prices. Across the bottom of the graph, you'll see numbers 00 through 12. These numbers represent years. Inside the chart, you'll see columns that are filled with either X's, which are prices going up, or O's, which are prices going down. In some of the boxes, you'll see numbers 1 through 9 or capital letters A, B, or C. The numbers 1 through 9 represent the months January through September, and A, B, and C represent the months October, November, and December. Before we begin with March 2009, take a quick look at the chart and notice the price movement for Euro-Pacific Growth Fund is very similar to what we saw in Growth Fund of America from 2002 through 2008. From 2002 through 2007, each of the funds demonstrated a series of higher highs and higher lows, a clear visual uptrend until we get to supply winning the battle in the beginning of 2008, through 2009 with each of the funds demonstrating a series of lower lows and lower highs. You will see the same pattern demonstrated in each of the subsequent funds that we will review in the next 3 episodes. Focus your attention on the column of O's in between the years 09 and 10. The last O in the column preceded by the number 3 is in the box for the value of $22 a share. Reading the chart across, we know that this value occurred in March of 2009. The method being used for chart construction here is called the 3-box reversal method, which simply means the only time we switch columns is if there is a significant change in price. And this is how it works. At the end of each trading day, we simply look at the closing price in the case of a mutual fund, and if we're in a column of O's, the first question to ask is, did the price fall to the value in the next box down or lower? If it has, we simply place an O in the next box and we are done for that trading day. If the price has not fallen to the value in the next box down, the next question to ask is, did the price rise to the value 3 boxes above the last entry? Hence the 3-box reversal method. If it did not, we make no entry in the chart and we're done for the trading day. Take a look at March 2009, where the last entry in the column of O's is at the price value of $22 a share. If the price had fallen to $21.50, we would have continued adding O's into that column. However, since the price rose to at least $23.50 per share, we moved one column to the right and started adding X's, which again are prices going up. So we are now in a column of X's. In that column, we see the number 4, 5, and 6, which tells us that the prices continue to rise without a 3-box reversal throughout April, May, and June. Between June and July, there was a 3-box reversal. In fact, in this case, the price fell 4 boxes, so we did shift to another column from X's to O's, which again represent prices falling. In July, we saw a 3-box reversal up, so we moved to a column of X's, followed by another 3-box reversal, shifting to a column of O's, and another 3-box reversal, shifting back into a column of X's. By August, represented by the number 8, the price rose to $33.50, and by October, the price rose to $36.50. Can you see by using the 3-box reversal method, we take a lot of the noise out of the typical chart, which captures every price, however insignificant it may be. In October 2009, price reaches a high of $37.50 before the 3-box reversal down to $36, and then one more box down to $35.50. By January 2010, the price reverses up to a high of $38, which is the first technical buy signal. It's called a technical buy signal because it exceeded the previous high of 37.50. It is not a call to action. It's just industry jargon used by the point and figure chartist. Some significant observations on the period that we just covered. Notice that in June we had the 3-box reversal to 29, followed by a 3-box reversal up in July, and the 3-box reversal down again, but the price stopped at 29. It did not make a new low. So it is said 29 is an area of support because at that price, demand reappears and prices begin to rise once again. The significance of the price rise to 37.50 is it crossed what is referred to as the downtrend line. On the chart, it is a 45-degree line represented by the blue dots originating at the top of the decline from 44.50 in May of 2008. On this chart, the uptrend line is established in March 2009, just below the price of 22, where Euro-Pacific growth ultimately found support. This is the 45-degree line represented by the red dots, which held until August of 2011. In all the years I've worked with point and figure charts, these trend lines remain strong areas of price resistance and support. In other words, violation of the trend line is a significant event and merits our attention. Okay, that's as far as we're going to go with Euro-Pacific Growth Fund as a training example. Stay tuned for the next broadcast where we will be using Davis New York Venture Fund next. Just a reminder, even if we're not using one of the funds offered in your 401k plan, you can still benefit by following along. The principles we discuss apply to all of them. If you found this helpful, click like on our Facebook fan page, the 401k Owner's Manual. You can always leave a review on iTunes or on the podcast page of our website, yourwealthpreservationcenter.com, or you can leave a comment below this YouTube video. If you would like a personal invitation to an online free live workshop, jump over to my sister site at 401kealert.com. Thanks so much. Until next time, I'm George Huss, and this is the 401k Owner's Manual.